Most income traders eventually blow up, even when their strategy works. And it's not because selling puts and calls doesn't work. It's because there are a few landmines that most people don't see until it's too late. Income traders don't need to understand everything. We just need to avoid landmines. In this video, I'm going to explain exactly why income traders blow up, what I personally didn't see early enough, and how you can avoid making the same mistakes, especially if you're selling puts or using margin. And make sure you stay until the end, because the third landmine is the most overlooked one, and it catches far more income traders than most people realize. If you're new here, my name's Michelle, and this channel is all about trading options for income. My strategy is simple. I sell puts for income, I sell covered calls for income, and I primarily use weekly contracts. Now, I'm not trying to predict tops or bottoms, and I'm not swinging for home runs. I focus on small, consistent, realized gains from week to week, hitting singles over and over and staying in the game. Selling puts and selling covered calls does work. Where people get in trouble is scaling, especially when margin is involved, without fully understanding what can change the rules beneath them. That's what this video is all about. Now let's talk about landmines. A landmine is not a bad company, and it's not a bad chart. A landmine is something that can suddenly change how a stock behaves around support, how fast it drops, and whether margin becomes super dangerous. And the chart just usually does not warn you in advance. So today, in this video, I'm going to walk through 3 landmines every income trader needs to understand. So let's jump right in. All right, the first landmine we're going to walk through is dilution and unstable float. And I'm going to use an example of MicroStrategy. Now let's talk about what float means. Float is the number of shares available to trade. And when float is stable, supply is predictable, and support tends to behave more normally. When float is unstable, new shares can enter the market over time, and support can weaken without an obvious warning. Now that matters a lot if you're selling puts. In May of 2025, MicroStrategy filed an 8K form. It's actually called a 424B5, and it established an at-the-market offering, allowing the company to sell up to $21 billion of common stock over time. Now here's how you look it up. You first go to the Edgar SEC site, and then you search the filings by typing the ticker in. Now the form that I'm referring to was back in May. Here it is here. Here's the exact text. You'll see language stating the company may offer and sell up to $21 billion of common stock. And here's why this matters for income traders. It doesn't mean that the stock can't go up, but it does mean this. Rallies may be sold into, prior support levels may matter less, and premium stays high for a reason. So if you're selling weekly puts, especially on margin, dilution changes the risk profile completely. Time is no longer guaranteed to be your friend. And as we can see in the chart, MicroStrategy did subsequently continue up before starting its significant downtrend that we're in right now. Now, I'm not here saying that MicroStrategy won't bounce back up. It's still run by Michael Saylor, one of the smartest guys in the industry. And it's still tied to Bitcoin, which does have very favorable long-term expectations. But what I am saying is this. One of the reasons for the depressed price is not only because Bitcoin has been down, and there are also new Bitcoin proxies entering the marketplace, but also the shares of MicroStrategy has been and will continue to be diluted by new shares entering the market. It's something that you want to be aware of. Now let's move on to landmine number 2, corporate actions. Corporate actions change the structure of a stock. This includes things like reverse splits, special distributions, and warrants. Income traders can get hurt when the rules change. Now I want to talk specifically about warrants. A warrant is like a very long-dated call option issued by the company. But here's the key difference. Warrants represent future share supply, even if they are far out of the money today. And let's walk through an example using GameStop. On October 7th, GameStop filed an 8K detailing a warrant distribution. Here's how to find it. Again, you're going to go to the SEC Edgar page. You're going to search the filings and type in GME as the ticker. Now the filing I'm referring to is from October 7th from the 8K report. And here's what I'm referring to here. You'll see language explaining how warrants were distributed, how they can be exercised, and how they create future share supply. And here's why this is a landmine for income traders. Warrants can be bullish for the company, but dangerous for income traders because the market knows future supply exists, rallies may stall earlier than expected, and support behaves differently. And personally, when I see heavy warrant complexity, I just treat the stock as a no trade zone for weekly put selling. Not because the company is bad, but because the structure just doesn't match an income strategy. Now, last but not least, I want to talk about landmine number 3, insider activity with real open market trades. This by far has always been my favorite tool to use. And we're going to walk through an example using Nike. Insider activity is actually one of the most misunderstood or ignored tools out there. But this is probably the easiest one to use. So again, we're going to go to the SEC Edgar website. We're going to type our symbol, Nike, and we're going to pull up ownership disclosures. Now here, what we're looking for are forms 3 and 4. So I'm going to show all insider transactions. And the example I want to show you is this one from December 22nd. This is where Tim Cook, Apple's CEO, and a longtime Nike board member filed a Form 4 showing an open market purchase of Nike stock. In fact, he purchased 50,000 shares at around $59 per share, totaling nearly $3 million using his own money, as we can see by transaction code P, his personal funds. Now, it's important to note that Forms 3 and 4 show insider ownership and insider trades. Anyone who is an officer, director, or controlling shareholder of a publicly traded company. Now, you're also going to see stock grants, option exercises, tax withholdings, other things that might not be as meaningful as straight buys or straight sells on the open market. But Tim Cook's purchase of 50,000 shares was not a grant, not an option exercise, and it was a real purchase using his personal funds. Now, insider buying does not guarantee that a stock is going to go up. It's a risk context signal, not a timing tool. I use it to decide position size, strike selection, and whether I want exposure at all. I look at it like this. If Tim Cook is putting $3 million of his own money into buying Nike stock, and I was already interested in perhaps buying Nike stock, well, that's a good sign to me. So let's wrap it all up. Before selling puts, ask yourself these 3 questions. Is there dilution or unstable float? Are there corporate actions that are going to change the rules? And what are insiders actually doing with their own money? If more than one landmine is present, trade smaller or don't trade. Skipping trades is a strategy and survival is the edge. You need to know that selling options for income does work. What doesn't work is ignoring the landmines. And as we talked about earlier, income traders don't need to understand everything. We just need to avoid the landmines. Now, if this helped you, make sure you subscribe to the channel. I'm posting videos just like this to help you make money and not lose money. Thanks for watching and happy trading.